2025 was loud. Geopolitical shocks, fractures, volatile markets. Amidst it all, the ESM held its course. It showed its resilience by the quality of its investment strategy, which outperformed benchmarks and generated a record net profit of 1.97 billion euros. This historic performance strengthened the ESM's balance sheet, while heightened geopolitical tensions triggered waves of uncertainty around the globe. In financial markets, the ESM demonstrated agility and strong credibility. The 2025 funding program reached 28.5 billion euros in bond issuance, 21.5 billion for the EFSF and 5 billion for the ESM in euro issuance, and a 5-year $2 billion issuance that attracted record investor demand, despite volatile conditions. The institution also issued 25.5 billion euros in bills. Two important political milestones marked the end of 2025 and the beginning of 2026. Kyriakos Pierakakis became the new chairperson of the ESM Board of Governors, succeeding Pascal Donohoe after more than 5 years of remarkable leadership. And on the 1st of January 2026, Bulgaria adopted the euro, becoming the 21st member state, a clear sign of the euro area's continued attractiveness. Bulgaria's subsequent ESM membership will grant it access to the region's financial safety net.
Dobre došla Bulgaria.
Yet, the geopolitical environment remained highly challenging. The war in Ukraine entered its 5th year. In April 2025, the US administration announced tariffs that sparked renewed market volatility. Tensions across the Middle East flared up and deepened. Despite this, the euro area economy proved resilient. Growth reached 1.4% in 2025, above expectations and up from the year before. The unemployment rate remained at levels close to its historical lows. Banks remained well capitalized and profitable. Sovereign spreads in the euro area stayed contained. And countries that once received ESM support continued to grow above the euro area average. A remarkable achievement. Beyond these immediate pressures, Europe's deeper structural challenges did not disappear. Weak productivity, fragmented capital markets, the fiscal weight of aging populations, the costs of the digital and green transitions, and significantly higher defense commitments across NATO allies. In such a context, it is key to comply with the Stability and Growth Pact and to spur growth. Europe also needs to deepen its single market and sustain its efforts to boost productivity.
Europe does not suffer from a lack of savings. We suffer from a lack of mobilization.
Therefore, capital must be mobilized more effectively through an integrated savings and investments union to finance innovation and help companies scale. In the EU, research and development intensity is only around 2.2% of GDP, compared with roughly 3.4% in the United States. Similarly, venture capital investment is about 0.3% of GDP in Europe, compared with roughly 0.7% in the US. In the current challenging context, preparedness prevailed as a central priority for the ESM. With more than 430 billion euros in available lending capacity, it remains an anchor of stability. Often, the ESM's most important function finds expression in the work that prevents a crisis from becoming one. The institution collaborated with its members to ensure its toolkit is adapted to evolving risks and remains efficient, with a deliberate focus on reinforcing its precautionary instruments. The ESM also continued to work closely with its members on matters related to its outstanding loans. In December, the ESM and the EFSF waived Greece and Portugal's proportional repayment obligations, thereby enabling both to carry out early repayments of loans made during the euro crisis to other official creditors. A powerful signal of renewed resilience and market confidence. At a time when international cooperation is increasingly under strain, the ESM deepened global partnerships with peer institutions worldwide. It was proud to co-organize the 10th high-level RFA dialogue between regional financing arrangements and the IMF in Washington, D.C., marking a full decade of close cooperation within the global financial safety net. Financial stability is not something an institution builds alone. It is built through sustained relationships, genuine knowledge exchange, and a shared commitment to the architecture that protects us all. The turbulence of 2025 also created a timely moment to reflect, look inward, and update the values that guide this institution. The result? Refreshed organizational values aligned around 3 commitments: strengthening Europe, teaming up for excellence, and acting with integrity. Because in a world where long-standing assumptions are increasingly being tested, preparedness, trust, and cooperation matter more than ever, and so do good policies. In the words of IMF Managing Director Kristalina Georgieva,
"Good policies make a difference."
While we might not be able to control unpredictable external forces, we certainly do have authority over our own policies and institutions. In solidarity with its members, the ESM continues to provide the assurance that when disruption comes, Europe has an institution ready to act: the ESM.